When you think of your credit report, where does it really come from? In today's video, we're going to be looking at the reporting agency in more detail, guys, and how the score is actually produced or created. The definition of a credit reporting agency, or the CRA, is a credit bureau, also known as a credit reporting agency, an entity that controls, maintains credit information on both individuals and on businesses. That is right, guys. Businesses can have credit as well. They can be established as a business. Now, one of the things to remember with the credit reporting agencies are they are private institutions. These are not government entities, which means we've seen in the past where a lot of news has said that they had breaches, they had inaccurate data, they had wrong reporting, resulting in people like you and I getting a much higher rate or having a much lower credit score and then paying more for the loans that we have. Now, there are three major credit reporting agencies. Experian, Equifax, and TransUnion are the three ones, guys, and they play the central role in the United States, depending on where you live, to report and maintain the credit reports. So essentially, if something is reported to one of the three bureaus, the bureau actually has to transfer it or has to share that information with the rest of the bureaus to try to stay as uniform as possible. Now, what a lot of people notice is when they go in there and they go to freecreditreport.com, they pull the reports. Some of the reports can be drastically different. Now, I know that does not give you a score, but we've seen, again, a lot of things that are reported on one versus another versus the third, or vice versa, that they are not literally mirroring each other between all of these bureaus. Now, data collection sources. So they collect data from a ton of different places, guys, including lenders, credit card companies, public record information, and financial institution information. Now, credit reports, we know, have been used in a lot more things than just getting a loan. We have seen it if you're looking to do a rental property, if you're looking to get an apartment, they will pull your credit. If you're looking to do a job application or looking to advance your career, most places nowadays will pull your credit. When you're looking to get insurance for your home, whether you're looking to get insurance for your auto loan, they will pull credit. It is kind of crazy, guys, that so much of the data with the inaccuracies that we see are still used for so many things in America. The next part we get into is the credit reports, guys. This is a compilation or a compiled data for each report for each individual that is usually based on social security number. That is how it pulls, guys, and it is because these social security numbers are unique to the individual. A lot of times, if you have a John Smith, if you have a Jane Doe, you're going to have a ton of people with that identical name, but the credit scores are going to be different, of course, for those individuals, which can kind of be separated by the social security number. Now, credit reports provide a very detailed history of an individual credit related activities. And also, this is what is based on the credit worthiness of an individual. So if you've had credit, you've had some late pays, you've had some delinquencies, you've had some charge-offs, they're going to give you a much lower score because the probability of you repaying and repaying on time is much lower. And that could be costs that are going to be incurred from that financial institution, which is the reason why risk-based pricing, they will give you a higher rate than somebody that has A+ credit that they know is going to pay them back. Now, the score generation itself is a very specific and sophisticated algorithm that they use to come up with a score. And again, this is to help lenders assess the creditworthiness of an individual or a business that is looking to borrow money. So again, the generated score just really goes through an algorithm similar to what we see with YouTube. It says, hey, based on the history that you've provided me, this is the score that I am returning, and this is the reason why. Now, a lot of people have also said that AI generated scores or AI credit scores are coming in the future. There are a lot of companies that are testing that, meaning they will go above and beyond just the algorithm that they're running and get more in depth to exactly how and why the behaviors behind the individual are really built, possibly giving you a higher score, again, depending on the AI model. Now, of course, with credit reports, guys, comes the accuracy and the dispute process. It is very important, and I really urge you, pull your credit report, guys. You get one full free copy per year from all three of them. Again, it will not give you a score, but you can make sure that everything that they are reporting, everything that they have on your credit record is 100% accurate, because in the event that you have to get a mortgage, you have to get a loan, you have to do anything where it does involve your credit, you want to make sure you have the best possible score that you can completely. have. Now, if there are inaccuracies in there, if there are things that are on there to dispute the accuracy of the information, it does take time. For majority of bureaus, you're talking 2, 3, 6 months to dispute and remove items that are on your credit report, if not longer, depending exactly where it is from and when it is from, which again can really delay you having the ability to get what you need with the utilization of your credit. Now, credit contents, what is really included in the report, guys? It includes personal information, credit information, payment history, credit inquiries, public records, which include bankruptcies and liens. Also, if there have been any freezes, any alerts, any fraud alerts, anything like that. So personally, in my financial institution, when we pull your credit report, it tells us a ton of information, guys. It's very, very hard to see the black and white when you pull someone's credit report and you see a bankruptcy, delinquency, when you see, multiple addresses, you see multiple accounts, a ton of inquiries. There's a lot of things that go into making up that score, which we really dissect in my professional life. Now, number 8, guys, we get into credit freezes and fraud alerts. They allow you to freeze your credit report. I cannot stress this enough. Just like the other thing, guys, freezing your credit report is super imperative. We see a crazy amount of credit card or as credit report fraud, where someone will actually get a hold of your social security number. They will open bank accounts. They will take out loans. They will do anything that they can. But now the credit freeze does really lock up the credit report, meaning if an institution goes to pull it and there is a freeze, they will get something back just saying this is frozen. Now, to unfreeze, all it takes is a phone call and a PIN number. Usually about 5-10 minutes, you can unfreeze a credit report. The next day, it does go back into that froze status. But again, thinking big picture, guys, how often do you use your credit? For me personally, it's probably every 3 to 5 years, if not a little bit more. So making sure that it is and stays frozen, especially when it comes to not only you, your spouse, but also your kids. There has been a lot of news articles, if you do a quick Google search, about that credit reports and credit hacking has been very prevalent to minors and their social security numbers. Again, fraudsters are using the information that they can obtain to really make, and really when your kid goes to go ahead and start establishing credit, they say they already have credit lines, they might be delinquent, they might be charged off. Good luck, you're gonna have to start the fighting process with that. Now, of course, with this comes a bit of regulatory compliance. They are required to comply with the Fair Credit Reporting Act, the FCRA, which outlines the standards for collecting, maintaining, and disseminating credit information. Now, this is, of course, one of the big changes that we're looking at in 2024. If Biden has his way, we will no longer have medical collections on credit reports, which means for a lot of Americans, which I believe they said about 65% of Americans that have medical collection on the credit reports, they're going to be wiped off in their entirety, which will be absolutely amazing. And the final point of this, guys, is looking in the financial decision making. Again, lenders rely almost solely on the information that is provided when it comes to making a loan decision, when it looks to approving loans, approving credit cards, even other form of credit. Even if you're looking at mortgages, mortgages have government guidelines that you have to qualify with a certain score. If you do not have that score, unfortunately, you're not going to be able to get a mortgage, which is the reason it is imperative, guys, that you maintain and you monitor your credit. If there's anything inaccurate in there, you make sure that you get it corrected, making sure that the credit is not only monitored, but keeping the credit frozen. That way you have the ability to freeze and unfreeze as you do need it within the credit report. So guys, just wanted to break down a little bit more when it comes to the credit reporting agencies and also the credit report itself. So let me know in the comments what you guys think, and I'll catch you in the next video.